Hello there, and welcome to the weekly outlook. Just going through the calendar and having a look, see what we've got going on next week. Now, on Monday morning, we've got the German IFO business climate on the euro. Not expected too much of a movement on currencies on this, possibly moving the DAX a little bit more. We'll have a quick look at the DAX. It's not one that we trade very often, but we have been expecting this big pullback that we've had recently, and it has had a bit of an uptick due to the fact that the possibly the oil recovered slightly. You see it's upticked here to this little area. We've got this area confluence around about the 10,000 level. And I would be tempted to sell this off again around the 10,000 level. I still think we've got further to fall on the DAX. I'm not looking for indices to start to recover until the middle of 2016. So if we take this to the weekly chart, I'm expecting, and we did say, going back to 2015, beginning of 2015, we were looking for a 50% a 50% drop in the indices across the board, and that's kind of started to happen, sort of in the middle of 2015. So we've still got further to fall. So we're looking for obviously the key levels of support and resistance. You can see here we've got a key level of resistance around about 10,000. So this is where I'll be looking to resell it with a stop loss probably above this sort of area here. Now, I'm not necessarily saying that the IFO business climate is going to be the sole mover of this one, but the DAX at the moment is starting to look a little bit interesting, and we can still look to sell this down to around about the 8.4, even the 8,000 level, and then we'll be looking to buy that back hopefully around about sort of July, August time. Okay, so moving through the calendar, we've got BOE. Governor Carney speaks on the pound. Now, he was quite dovish last time on the pound, and we have had a bit of a rally on the pound recently, leading up to this back up to the 143 area. Now, I can't imagine Mark Carney is going to change his tone overnight to being hawkish. So I would imagine that this is probably going to the financial stability report. Is probably going to see the pound sell off again. So really, this little rally here has given an opportunity to resell the pound. If we can get back up to those sort of 143 levels before Tuesday, then it will be an opportune time to sell. But we can also look at things like the pound Australian dollar, which had a fairly decent pullback as well, up to the pivot point there. And this sort of area, we're starting to get this sort of morning star pattern in the candlesticks here as well. So this, I'll be looking for maybe the pivot point here on Monday, 203.85, to see if we can resell this going into Mark Carney's announcement on Tuesday. Okay, so we've then got I actually missed out on the Monday there. We've got Mario Draghi speaking as well at 6 p.m. on Monday evening. Now, Draghi was a little bit dovish, suggesting that further QE will be coming into the euro in March time, and the euro did sell off, recovered, but now just towards the end of Friday, it started to peak down below that 108 level. If we can get a new low below 107.75, then I would expect the euro to drop back down to 107. I think there is quite strong support around 107. It's going to be quite difficult for it to break through there. So this would be probably a profit-taking area. See if it pulls back up to 107.50 and then resell it. And take it from there. But we are still looking for this overall target here, which is it's taken a long time to get down there, but of 105.50 initially, and then 104, and then obviously towards the end of 2016 or to the middle of 2016, we are looking for parity down at the 1,000 level. So it'll be €1 to $1. Okay. So we've still got a long way to go, and I'm sure we're going to see some pullbacks, some consolidation in the time between now and then, but the overall direction still remains consistent. CPI quarter on quarter on the Australian dollar at 12:30 a.m. on Wednesday. Now CPI, the quarter on quarter here figure is expected to drop. Australia is doing much better certainly than New Zealand at the moment. This is why in the live room I suggested to buy Australia, New Zealand the other week, and it has started to rally, but it's been fairly sluggish. But each time it pushes down here, I do think it's an opportunity to rebuy Australian dollar against New Zealand dollar. Now, if that CPI figure comes in slightly better than expected, I should imagine we'll see Australian dollar rally across the board. So Australia against New Zealand is a good one. Also, again, the pound Aussie, with that dovishness coming from Mark Carney, if we get a good CPI reading or better than expected CPI reading on Wednesday, then that pound Australian dollar will to continue down as well. Now, one of the things that Mark Carney did say is the pound is overvalued, and I'm obviously not talking about against the US dollar because it's quite low, but some of these antipodean currencies and some of these cross-currency pairs, you can see that the pound is still fairly high in relation to where it's been in the past. Just let this chart update here and you'll see what I'm talking about. He says, there we go. Okay, so you can see here, going back to 2014, the pound, or in 2013, you can see the pound right down at 1.4 against the Australian dollar, and we've had this huge rally, and even now the pound started to lose momentum. The data hasn't been as good. We're getting some fairly dovish comments coming from the MPC members. We started to see it push down. I think it's got a lot further to go, and I think we're probably going to be looking at the 195 area for it to sort of peter out and find a happy price. If the Australian dollar data does continue to be not too bad, then I can see that happening over the next coming weeks. So again, that same sort of entry price there, around about the pivot point on that one. Okay, so on the Tuesday, we've got CB consumer confidence on the US as well, but not expecting too much of a move from that. The data's fairly consistent. The US dollar data now coming out now is really not going to have that much of a massive effect. One of the things I am concerned about with the US dollar is its failure to remain above the 100 level. And you can see every time it's been around this sort of price level, it's sold off quite heavily, the dollar. So I would be concerned about that, and this is also a concern for all of those basket of currencies: the Australian dollar, US dollar, Australian dollar, euro, pound. They're all going to be affected by the fact that if the dollar index starts to sell off, then those currencies will gain momentum. So we need to see strong weakness in that euro, some pretty negative comments from Draghi to keep it coming down, and also the pound as well. But it does refer back to the Australian dollar here again, and its potential to rally up if that dollar index does sell off when it reaches those resistance levels that it's failed to break in the past. And you can see, even the times that it's managed to get above 100, above the 100 mark, it's sold off, quite fast succession down to 97 here. So, we've got to be aware of that it is struggled in the past. So bear that in mind when you're buying the US dollar against some of these currency pairs. Okay, going into Wednesday evening, we've got the FOMC rate statement, we've got the Fed funds rate and the official cash rate. Now, we're not expecting any change from the Fed funds on this occasion, even though they've started a rate hike cycle. We believe many analysts believe that they'll only make 3 hikes this year, and the next one won't be until June. It's bound to cause some volatility in the currency charts, and the FOMC rate statement is going to be the most important thing here. Now, if they're kind of quite adamant that they are going to raise rates again, and that they're going to give us some sort of forward guidance to how many rate rises are going to come, then we could see a fair deal of volatility going into those US dollar cross currencies. But I do feel that at this time it will probably just return to the price that it started from. Okay, so just bear that in mind when you're trading the currency pair coming up to Wednesday evening, that you have got some huge volatility possible in the charts. So adjust your stop losses accordingly. We've also got the official the RBNZ rate statement and trade balance, and the official cash rate on New Zealand. Now, this is expected to stay the same. Now, we have had some fairly poor inflation data and poor employment data on New Zealand dollar. I wouldn't be surprised if they cut it by 25 basis points on this occasion, and it could be a bit of a surprise rate cut. Now, sometimes the New Zealand dollar is one of those funny ones. It's sometimes when they cut rates that it can still rally. It depends on the situation and how much the market's priced in. Now, at the moment, the New Zealand dollar has had a bit of a rally against some of the currency pairs. I do think if they cut rates, it would initialise quite a big sell-off on the New Zealand dollar. Now, New Zealand dollar, US dollar is a good opportunity at the moment because it has pulled back up to the 6.5 area, which was an original fair price. They have got a new fair price of 60 cents to the dollar, which is down here. So, this will be our next target for the New Zealand dollar. If they cut rates on this occasion, I think we'll see that meet, and I think it's going to be widely unexpected for them to cut rates. So, I would keep an eye on that one. Going through to Thursday, we've got prelim GDP on the pound. That is expected to come in slightly better, but I don't think it's going to be enough to cause any sort of rally in the pound at that time. We've got core durable goods orders and unemployment claims on the US dollar. Again, not expecting too much from that. The big one on Friday is going to be monetary policy and the BOJ outlook statement early in the morning. Now, there has been some speculation that the BOJ may well need to do some further easing to keep things on track. Now, we did have this before. We did hear about this before. And in fact, they surprised the markets by not doing any further easing and saying that they were on track. This could very well be the same case again. Now, the US dollar, Japanese yen, we're very much on the sells this year on that currency pair due to the safe haven flows required with the slowdown in China. Now, as you know from previous videos on the daily charts, I've got marked out here some serious sort of selling positions and also some big areas of consolidation. We've just pulled back, and the market's pulling back now due to the fact that the market feels that the BOJ needs to do further easing. So what I would probably expect to see is these areas of consolidation fulfilled, and I'll be looking to sell from sort of the midpoints. Now, at the moment, we're at 118.71. I think on Friday, before Friday, we could very well be at 120. If that's the case, then I'm going to be looking to sell into Friday's monetary policy statement. If we're not that high, then I will wait to see what the monetary policy statement is before I take sell positions. Okay, so also on the euro, we've got core CPI on the euro at on Friday at 10 a.m. Flash estimate expected to be slightly better. Core CPI flash estimate year on year expected to remain the same. Not expecting those figures to have a massive effect on the euro unless they're out of line. But we've also got advanced GDP on the US dollar, which is expected to drop, and we've got GDP month on month. Again, US dollar data at the moment is fairly speculative to what sort of effect it's going to have on the currency due to the fact that it's rallied so hard over the last 18 months. So I'm not particularly looking for those figures to affect the market in a great deal of capacity. Okay, so that's it for this week. Hope you can make some pips and have a good trading week.